Hello, hello, hello. Welcome back, business leaders. In our session today, we're going to focus on an often overlooked skill that is important for any successful business: effective tax communication. Whether you're discussing with partners, pitching to investors, or explaining financials to stakeholders, clear communication about taxes is very important. But before we get into this wonderful topic, I'm going to introduce myself. So, my name is Shane Harris, and around here on these social media corners, I'm also referred to as Shane the Negotiator. And I help coaches, consultants, and service providers who are overwhelmed and lack guidance to achieve true financial freedom. And I do that by providing expert tax and coaching services. So, let's get into the topic: how to talk about taxes with partners, investors, and stakeholders. And if you're new to this channel, don't forget to subscribe, like, and share for more content. So, the importance of clear tax communication. So, taxes matter and tax matters can be complex and very intimidating. However, clear communication about these issues is very important to build trust and transparency with your partners, your investors, and your stakeholders. It ensures everyone is on the same page, regardless of financial health and, of course, compliance. So, communicating with your business partners. When discussing taxes with your business partners, you want to focus on how tax strategies align with the business goals. It's important to discuss potential tax liabilities, deductions, and planning strategies. Use language that is clear and avoid jargons so all parties understand the implications and responsibilities. This is not the time to be cute and use cute phrases. You want to be straightforward and to the point and use terms that is going to be understandable and they can get the big picture of what you're speaking about. Pitching to investors. So in conversations with potential investors, your ability to articulate the tax advantages and obligations of investing in your business can be a deal breaker. It can be a deal maker or it can be a deal maker. However, highlighting how efficient tax management contributes to the overall profitability and sustainability of your business is going to be very important. So when you're engaging with those stakeholders, you want to include, which stakeholders include your shareholders and of course those board members have a vested interest in your company's financial performance. Regular, transparent updates about tax obligations, changes in tax laws that impacts the business, and strategies for tax efficiency can build confidence and trust. So now, when it comes to speaking about these tax matters, this is the actual part where you may not necessarily be updated with all those tax laws. This would be the perfect opportunity to partner with your tax professional, or if you have a CFO that you're working with that is heavy into tax matters, can help you to articulate and speak to these stakeholders, these investors, and these partners with you to relay the message to them what you may not be able to articulate. So, tips for effective tax communication. You want to be prepared. So, understand the tax topics thoroughly before you have these discussions. Number two, simplify the complex concepts. You want to break down the complex tax issues into simpler terms that's easier to understand, that's a little more relatable. You want to stay updated, so keep abreast of at least of the latest tax laws and regulations. Lastly, encourage questions. You want to create an open environment where questions are welcomed and it is addressed clearly and effectively. So some common misunderstandings that you want to avoid. Be aware of common misunderstanding about taxes, such as the difference between tax avoidance, which is legal, and tax evasion, which is illegal, and you can go to jail. And clarify these concepts during the discussion. So some practical scenarios. So for instance, when you're explaining the impact of a new tax laws to your shareholders, you want to focus on how it's going to affect the earnings. compliance, and future financial planning. You want to provide concrete examples or scenarios to illustrate these impacts clearly. So to wrap this all up, and to conclude, effective tax communication is an essential skill for any business leader. It is not only foster transparency and trust, but it also ensures informed decision making across the business network. So some teasers for the next topic. In our next discussion, we're going to get into the world of real estate and explore how it can be a strategic addition to your business portfolio. So join me for real estate, tax smart investment for business owners. You do not want to miss this one. So in closing, thank you for joining in today's session. And if you found this insightful and it was beneficial to you, please like, share, and subscribe. And don't forget, clear communication is a cornerstone of good business. And so keep those lines of communication open, and I will see you on the next one. You guys have a great and wonderful day.